The practice set is now up to the stage where we do end of period adjustments. So let's have a quick recap of the accounting cycle so we see where end of period adjustments fit in. We've already seen that you can bring a transaction to account through a journal, and mostly we've used special journals, and then we post the journals in some way, mostly in summary, to the general ledger. We also saw for some transactions also need to post them to a subsidiary ledger. But the general theme is that you have a journal, you post it to the general ledger, and then your general ledger is summarised in the trial balance. Now that in the trial balance, we did that in the worksheet. So the trial balance becomes the start of a worksheet. And the very first column in the worksheet we often refer to as the unadjusted trial balance. And why? Because we haven't done adjustments. Why do we have adjustments? Well, there's a very good video called End of Period Adjustments, and so it's probably worth looking at that. You'll also have a clearer view of why we do adjustments after we've worked through a few, because what adjustments are doing are making transactions fit into the period to which they relate. So the adjustments will come in here, and what we'll need to do is to go back and enter those adjustments in the general ledger, and we'll have an updated general ledger and then an updated trial balance. So where we get the information about the adjustments, well, we'll go to helpful information. And in helpful information, we will see we've got 5 items here require an adjustment. We'll at least get started on these in this video. Now, this might also be a good time to set up some working papers. So what are working papers? Working papers are where you can do your calculations, and in the journal you might just say refer to working paper 1, refer to working paper 2. So without having to write all the information in the explanation in your journal, you do it in a working paper. Now what we might do to set up a working paper is to, if I can show you how to do this, right, I'll put this up here. Straight after helpful information, do a right click, insert, worksheet, and I'll call that working papers. You don't need to do it in here, you can just do it on a piece of paper, or in fact you don't even really need to do working papers at all. But I will show you one other thing as well that might be helpful. So I will go to View, and I'll click New Window. Now nothing appeared to happen, but what really happens now, we've got 2 copies of this spreadsheet, and I will go Arrange All in vertical, and now I'm only using a small part of the screen. We can see I've got 2 bits of the practice set. So I'll now go back to helpful information. Actually, I'll go back to helpful information on this one, would be easier. And I can put here working paper 1. Working paper 1, office supplies. And the first item I'll put in here is office supplies as per general ledger. Now we can look at the general ledger, or we can look at the trial balance, because you remember the trial balance is exactly the same figure as the closing balance of the general ledger as per general ledger. So I'll go to trial balance, so I'll move along here, trial balance, and I will see that office supplies on hand is $16,000. So we're recording them in our books as $16,000. Now, our books think we've got $16,000 on hand, but when we've done the stock take as per the count, as per count, we have 10,000. So that means we have used $6,000 worth of supplies, which is 16,000 minus 10. So what we've done, we've used that amount of supplies, and so our transaction we need to bring to account now, the journal, will be debit supplies expense, $6,000, and credit supplies on hand, $6,000. So in a moment I'll fix that 6,000, not 600. In a moment we will go and do these adjustments in the workbook. So working paper 2 is insurance. Did I mention there is a good video on supplies, so it's probably worth looking at that. But if you've really got the handle on this and you know how it all works, I wouldn't do that. Insurance, 12 months insurance including GST was paid on the 1st of May 2013 for 12 months. So sorry, $12,000 excluding GST. That's going to make it easier to do. So we have used up May, June, that's it, 2 months. We've used up 2 months. It's $2,000. So what we've done is that should have been posted before to prepaid insurance. So let's just check in our trial balance. So getting there. Trial balance, prepaid insurance, $11,000. Actually, you can see, and so last month we've brought to account 1,000 of it. So in May we would have debited 1,000 for insurance expense. Now we're going to debit another 1,000 this month. So we'll know at the end we should have $10,000 still in prepaid insurance. So insurance is 12,000 per annum divided by 12 months equals insurance expense for June, $1,000. So that will be debit insurance expense, 1,000, credit the asset of prepaid insurance, 1,000. So I guess you can see what has happened here. We have moved an asset to an expense. We've had prepaid insurance, which was an asset. As we've used it up, it's become an expense. So let's have a look now at working paper 3. Depreciation. Depreciation is calculated using the straight line method. Now, that's the simplest method. and we will look at other methods when we get to depreciation later on. So the residual value of the equipment is $20,000 and the useful life is $10,000. So we've got residual value of equipment, useful life of machinery, that's the same thing. The equipment and the machinery is the same thing. So let's again go to the trial balance. And we can see our equipment, $140,000 we paid for it. We've accumulated $23,000 depreciation, but our cost was $140,000. So we go back to the working paper. We put in this cost 140,000. Residual is 20,000. So what's the residual? That's what we believe at the end of its useful life we will be able to sell the item for. So we come to an amount here called the depreciable amount. I'll copy these over. Depreciable amount is 140 minus 20 equals $120,000. Now again, you don't need to understand how depreciation works incredibly well at this stage because we do a topic on it. If you'd like to know a bit more, there is a video on depreciation. Now we have useful life, 10 years. So straight line means we depreciate it equally in each year. So we'll have depreciation expense per year. It's 120,000. And now we want to depreciate for 1 month. So we divide that number by 12. So depreciation expense per month is 1,000. So we'll go debit depreciation expense $1,000, credit accumulated depreciation $1,000. I'll do the next one because it's pretty easy. And working paper 4. We've just set interest of $650 as accrued on the note payable. So that's just debit interest expense credit accrued interest, or probably interest payable. I should look that up, but that's probably what it will be, and it's $650. Now I'll leave the last one, the calculation of bad debts, because it's just a little bit more complex, and again it's something that you don't need to have mastered to this stage, but will by the end of the unit. So this will give you some sense of how it will work. So now to post these, let's go to the trial balance again, and this time we'll use the trial balance as a worksheet. So I'll just move these items over a bit further. You can see them all there. See what I can fit in here. So first item is debit supplies, credit supplies on hand. So I'll just make this a bit bigger. I can't make it a bit bigger. So I go down to debit suppliers expense, 6,000. Office supplies expense, 6,000. And credit supplies on hand. Office supplies on hand, 6,000. So that's that item done. Working paper 2 is insurance, and we're going to debit prepaid insurance. We're going to debit insurance expense. That's 1,000. And we're going to credit prepaid insurance, 1,000. So we see these again in the adjustments column. So these are end of period adjustments. Now this is just in the worksheet, and you should have a sense already that the worksheet is really outside the accounting cycle. It's just there to help us plan, and also sometimes, which doesn't happen at the end of a period, but at the end of a month, you might just do your adjustments in the worksheet, so you can produce financial statements for the month, but then you may not actually do the journals because you'd have to reverse them the next month. But here we're going to have to do the journals as well. So now debit insurance expense, 1,000. So all of these at the moment are showing a pattern: debit expense, credit in an asset. And that's why, because we're using up an asset. Debit 1,000, debit accumulated depreciation, 1,000. Debit interest payable. This one is slightly different. This is debiting an expense, which is interest expense of 600. Of 650, and crediting interest payable. So this time we haven't used up an asset. What we've done is created a liability, and we've created the liability. The other side of that is we bring to account an expense. So there is each of those items done. Now what we need to do is write the journals for those. And bear in mind, we're still going to have one adjustment to do. So here I will go now to the general ledger. Go and find the general ledger. And we can enter these items. Actually, it should also have a reference here. A number of references we've put in, but we will put in the reference of, sorry, I've gone to the general ledger, I should have gone to the general journal. We'll put in the reference of the journals. So, the date will be June 30. The first one, if we do them in the order they came, was supplies on hand, supplies expense, so supplies expense, debit 6,000, credit supplies on hand, 6,000. And our note might be supplies used for the period as per WP1. Working paper 1. Now again, we haven't posted any of this. Let me drag this over a bit further. Just so we can see, I debited there 6,000, and 6,000. The next item that came up was the prepaid insurance, so it will be June 30. Debit insurance expense, $1,000, and credit prepaid insurance, $1,000. Now again, if you can do these quicker than me, you don't need to watch the rest of this video. June 30. The next one we did was accumulated depreciation, will be debit depreciation expense, $1,000, credit accumulated depreciation, $1,000. I haven't been putting in these items used, the descriptions yet, but depreciation expense for June 2013 as per WP4. Prepaid insurance used up as per WP3. And I've got one more item. Here's June 30 interest expense, $650 interest payable, $650. Interest accrued on note payable as per WP4. Now, as you see, we've still got one more journal to make, and that's for the bad debt expense and the allowance for bad debts. But let's, in the meantime, go back to the worksheet. And we'll see what will happen here. Eventually what we'll do, and the cash at bank won't change, so I can see I've got to take the trial balance, add the adjustments to give the adjusted trial balance. So we can see this will equal the opening balance plus any debits minus any credits to give us the closing balance. So that hasn't changed. That makes sense. Accounts receivable will be the same. Allowance for bad debts, well, I won't do it yet because it is going to change. Notes receivable, it's not there. Inventory, let's look at one here that will change. So we have what we had on per the books, plus any increase in supplies, which was none, less any supplies used, which was 6,000. So we've got a closing balance of supplies of 10,000. And if you go back to the working paper, you will see that in fact that's what we should have had. Now you'll need to work through all of these after we've done the last item to get your adjusted trial balance. But that's probably enough for this video.